Welcome back to CryptosRUs. I am George. We're all George. So it seems like we have some more FUD. Some more FUD that I want to address tonight. Of course, the market is still hanging in there. We have some Dogecoin news that I covered already. I'll briefly talk about that. But there's also more FUD, the latest FUD, I should say. So in this video, I'm going to address the FUD. Why I think it's just FUD, and also why I think we should ignore it. So thanks for tuning in. As always, smash a like, subscribe to the channel. 2 streams every day. 11:30 and 8:30 p.m. Central Standard Time. So make sure you hit that like button, hit that notification bell, and follow me on Twitter, Facebook, Instagram, and TikTok. All right, guys, let's do this. Welcome, welcome, welcome. Let me change my screen here. And here we go. Oh, wrong video. All right, so Bitcoin is basically exactly where it was this morning, around 36,000. It got as high as 37, 36. You know, still going sideways, right? People are still antsy, wondering what's going on. Why is Bitcoin not moving yet, right? There's a lot of theories and speculation, but one thing's certain, there's still more FUD going on. And I want to address it, but right now Bitcoin is still hovering around that 36,000 mark. The overall market cap is a little bit higher. Bitcoin dominance went down a little bit more, and that's because, you have something like Dogecoin that is very strong today. Actually, in fact, not just Dogecoin. Polkadot was strong. XRP was actually up this morning. Cardano is still up, but Dogecoin got a big boost today, and that's because Coinbase decided to open up. So I created a separate video just about this, but basically you will be able to trade Dogecoin on Coinbase Pro in a couple days, June 3rd, but right now they're allowing deposits. So Coinbase already teased this before, and now it's coming. Which is why Dogecoin actually got a good boost. So overall market cap, actually, you know what? It's actually slightly higher than this morning. From what I remember, it was around this point, but BTC dominance is down because of some of these altcoins that are showing strength. Again, whenever altcoins show strength, that's a good thing. That means retail investors, they're coming back in. This is not driven by institutional investors, right? So some retail investors decided to ignore the FUD, put money back into the market while things are low, trying to take advantage of the market, of the low prices, and that's what we want to see, right? We want to see that happen. We don't want to see everyone sit on the sidelines or out of the market, fearful about what's going on, right? We know that we just had a whole bunch of FUD the last few weeks. There was a lot of people that were also creating videos. They're not even crypto people, but everyone's jumping in a crypto bandwagon because they want the views, right? Like, for example, I just saw this Tech Lead. He's a 1 million plus subscriber channel. Talks about tech, very facetious. And he created a video, why I sold all my Bitcoins, like a few days ago. And now he comes back with another one. I shouldn't have sold my Bitcoins, right? Like, you have all these guys that they're not even in crypto. They're jumping a bandwagon. They have a large audience. And if they create a video saying, I'm going to sell my Bitcoins because of this, it's going to cause a lot of fear and panic, right? So I don't like that at all. I don't like that at all. And our favorite Bybit shiller, the Moon, he seems to have changed his tune because people realize that he doesn't go with crazy faces anymore, right? You look at all these faces, it's like the end of the world, but you're getting a Bybit referral, so things are good. So he has changed that, but then I looked at his recent video, and you know what? Half of his video is take this trade on Bybit, get $1,600 free. I mean, he literally leaves it up on the screen for half or more than half of his video, right? So I don't think it's changed at all, and I think leverage is also having a destructive nature on what's going on right now too. So I'm still not a fan of that. But that is still ongoing. But again, ignore leverage. Don't do it. You're going to get wrecked. You're going to get wrecked no matter how many signals and lines and indicators and support levels that gets drawn, no matter how much is going on here, right? No one really knows what's going to happen to the market. So if you use Bybit, you use leverage, you go get wrecked. So don't do that. Don't do that. All right. So moving on, let's talk about the very first. Let's talk about the very first FUD that came out, and that is JPMorgan once again is trying to cause some FUD, and says big investors are no longer buying Bitcoin. Ooh! Not only are they not buying Bitcoin, prices can fall further. Now it makes you wonder. It makes you wonder why JPMorgan would come out with this. Right? Of all times, why now? Why now? It just makes you wonder. Are they really telling the truth? Are they really trying to do you a favor and telling you, hey, price go fall down, so you better be careful? Are they really in the business? Are they really in the business to warn you? Warn the regular folks about Bitcoin, right? Even the ones that may not be invested in it. Are they really in the business of telling you and warning you that? Yeah, you gotta think, no, that's not what they're all about. No, they're not, right? So just to look at this. This was from a month ago. JPMorgan Chase poised to offer Bitcoin fund to wealthy customers. And we're talking about the 1 million plus, okay? The 1 million plus wealth clients of JPMorgan. They just announced this a month ago that they are going to come out for the very first time their own JPMorgan Bitcoin fund that will roll out as soon as this summer, and they're going to allow all their wealthy clients to get involved with Bitcoin. This was a month ago. Okay, so do you think that JPMorgan really is releasing this out of the goodness of their hearts to tell you, to warn you that, hey, you know what, all that we've been preparing for, that's nonsense. You should be selling your Bitcoin right now. Put one and one together. Just put one and one together. Why do you think they're doing this right now? Because they know the market is weak, right? They and others may be behind the weakness, and they're trying to add more FUD because they want you to sell your Bitcoin. And guess where it's going? It's going to go into their JPMorgan Bitcoin fund. They need to have some Bitcoins in that fund to be able to sell it, right? So what's happening is they're driving more FUD so they can buy more Bitcoin, and they're going to put it in their fund, they're going to buy it cheap, and then they're going to sell it to their clients at a premium or charge some kind of service fee. And that is the way they work. This is the way they work for everything. And JPMorgan was fined $1 billion for manipulating silver, and they have been fined billions upon billions upon billions upon $1 billion for other things like money laundering and other things, right? So, again, this is why FUD comes out. There's a reason for it, okay? You look at a headline like this, do you think the analyst or whoever's working at JPMorgan really cares that you as a retail investor, that you have Bitcoin, so they better release this news to you that, oh, you trust us, our big investors are not buying Bitcoin anymore, so you better sell. Think about it. Why would they release that? Why would they release that, right? That makes no sense at all. So don't fall for this. So, of course, this came out today. It does not surprise me. And other banks are doing the same thing. Whenever they would need to accumulate more, they spread FUD. And then the next minute, you see something very positive come out of the same bank, right? And JPMorgan has been caught doing this many, many, many times. All right. Now, the second thing. Now, this is more complicated. This is a lot more complicated. A lot of people keep asking me about it. I feel compelled I have to talk about it. And that is Tether. All right, so the reason why I have MeetKevin on the thumbnail is because people kept sending me this video. Kevin just did another video. A month ago, he created a stablecoin video more around BlockFi and lending and how he said that could be the destruction of cryptocurrency. So this time around, again, he's referring to this article from Bloomberg. And the title is just nasty. Bloomberg just exposed cryptocurrencies. Did it really, or did it just expose what they think are the dangers of Tether? Again, That's why I feel like I have to present the case here. Now, Kevin is I'm not saying anything bad about him. He does his research and he brings out some good points. So I'm going to bring up some of those points. But, there are some things he's just not aware of. And when I went on and did an interview with him, I kind of covered some of those things, especially about the video that he created about lending and fractional banking, basically what he was describing. And he had some concerns about it. So let's talk about this. So what this Bloomberg article is talking about, this is focused primarily on Tether, not the other stable coins, but primarily on Tether. And what they're concerned about is Tether is not back to USD. They're back to Tether reserves. They call it Tether reserves, and it's 1-to-1 in terms of Tether reserves. But out of the reserves, very, very, very little of that is actually cash. So this author, Timothy Masad, makes the case how Lehman Brothers, their money fund before, also had something called, commercial paper. And that commercial paper became worthless because back in 2008, companies and everything else was collapsing. So commercial paper was worthless. And that had a lot to do with Lehman Brothers collapse and their money fund collapsing and this and that. So Timothy is making the same point with Tether and how a large amount of Tether reserves is in commercial paper. Okay, so I'm going to address that real quick. But one thing I did want to address is when this video from Kevin, he again talks about not only Tether, he talks about Gemini. So he's singling out Gemini, saying that, hey, you know what, right now there's about 106 million Gemini dollars out there. And his concern is that Gemini dollars, like Gemini themselves, give you interest if you just simply deposit it, right? Kind of like BlockFi, kind of like Celsius, kind of like Nexo. He's like, the reason why they give you interest is because on the other side, they lend it out. They lend it out to other institutions or whoever that may want to borrow that money. That's why they charge those institutions percentage, and then they're able to share that percentage to you as someone who deposits. That's how it works, right? Now, he makes the argument that, well, once they lend it out, whoever they lend it out to, let's say company A, can then lend it out again to company B. And they may do some kind of, uncollateralized or collateralized loan or something like that. So company A can lend it out to company B. Company B can then do the same thing and loan it out to company C and company D and company F, and it goes on and on and on. So Kevin brings up the fact that, well, that's dangerous. You don't know how many layers of loans there is based on the initial loan. And I made this point before. I'm like, you just got to think about this. If you loan it to company A, and then company A loans to B, C, D, wherever, and it keeps defaulting, the one that gets screwed is not, in this case, not Gemini, it's company A. You know why? Because company A had to put down collateral to borrow what they did. So if they had to borrow, let's say they borrowed $10 million, they had to put down $20 million worth of crypto to be able to borrow the 10 million. So these companies like Gemini and BlockFi and others, they're not just doing uncollateralized loan even to the institutions. They do collateralized loans even to the institutions. So in this case, in this example of company A lends it out to B, C, D, and E, and they all default, well, then company A is screwed because they're the ones that's loaning it out. And if company A gets liquidated or they default or whatever, Gemini is still okay because it's usually a 2-to-1 ratio, right? So if they're borrowing 10 million, they have to put down 20 million of some kind of collateral, and then Gemini could just liquidate that. So that's how it works. So it's not as I don't know. It's not as simple, I guess, or it's not as risky as Kevin assumes. Because I think he missed the part that the people that are borrowing from Gemini and BlockFi and so forth, they have to put down collateral too. They're not just borrowing it based on credit. They are borrowing it based on collateral. The whole thing is just based on collateral. And you as an individual, if you want to borrow, you also need to put down collateral. Usually it's 2-to-1. Sometimes it's a little bit less depending on how much interest you want to pay, but still, there's some kind of collateral. And if the underlying value of what you put down goes down, then you get margin called and you have to put a little bit more. or they're just going to start selling off your crypto to make up for it. So that's number one that I want to address. Okay, that's number one. Number two is the bigger concern, and this is more complicated, and I do think that there may be a point to this. So this is what Bloomberg and others refer to Tether, or they're looking at Tether reserves. So this is a breakdown of it. So you could see that this is March 31st. So in the last 2 months, 3 months, could be different, but still. Now, the vast majority of this, about 76% is cash or cash equivalents. Everything else is secure loans, corporate bonds, and other investments, which is small. But if you look at this part, this is where Bloomberg, makes a big fuss about. So if you look at the 76%, you look at out of the 76%, 4% is about in cash. Okay, then you have a large portion that is fiduciary deposits, and then you have repo notes, treasury bills, and then you have commercial paper. So the one thing that's unknown is this 24% of fiduciary deposits. From what my understanding, from looking it up, that just means that you have a third party making deposits on your behalf. So this 24% could be cash in an account that's just controlled by a fiduciary. In this case, it could be Bitfinex, it could be some other company, right? So this 4% cash can actually be 28% cash. So this part wasn't addressed, and we don't really know. But bear with me at the end, I'm going to explain why I have less concerns about this, because there is someone that just audited them recently. So there's that concern. Now, the other bigger concern is this commercial paper, and that's where this author, Timothy, said, hey, 65% commercial paper, you don't know anything about it, that's risky. Commercial paper, what is it? It's a security issued by a large corporation to obtain funds for short-term debt obligations. So if a large company wants to meet payroll and they can't somehow, they can sell off commercial paper, usually at a discount, okay, which the person that owns it can redeem later on. So that's what commercial paper is. And normally this is sold by large corporations with great credit ratings, okay? So you're assuming that, yes, Tether has a large portion of commercial paper from a company that has really good credit or history. We don't know. So that's what Bloomberg is arguing. We don't know. So the whole point of Bloomberg article is that there's a lot of stuff we don't know. That's why we need to regulate it. We need to regulate it hard. So he calls upon Gary Gensler from the SEC to look at it, to audit them, and to regulate the hell out of this, because this could be the next Lehman Brothers, according to, Timothy, right? So this portion I will agree, because I don't know. I have no idea what Tether, what kind of commercial paper or where it's from and stuff like that. But here's the thing, and this is what I was referring to before. I think a lot of people miss, even the author, because the author didn't mention this, Kevin didn't mention this, that the New York Attorney General's office just conducted a 22 months investigation into Bitfinex, the parent company of Tether, and Tether itself. 22 months, that's almost 2 years, because they had the same concerns. Bitfinex had some stuff going on. They borrowed an $850 million loan from Tether, uncollateralized loan, right? And the people were like complaining. So New York Attorney General office looked into them. At the conclusion of this, what they deemed was the $850 million was paid back to Tether, right? Bitfinex no longer owns any Tether. Everything that they borrowed is paid back. And also with the settlement, not only the $18.5 million, if you look at the press release from the New York Attorney General's office, they talk about all these things, there's like issues and stuff like that they didn't like, right? But if you look at the settlement, besides the $18.5 million, additionally, Tether must offer public disclosures by category of the assets backing Tethers, including disclosures of any loans or receivables to and from affiliate entities. The companies will also provide greater transparency and mandatory reporting regarding the use of non-bank payment processor or other entities used to transmit client funds. And Tether and Bitfinex is required to do this for the next 2 years. This is part of the settlement, okay? So here's the thing. Here's what makes me think that we may be over-worrying, because I guarantee you within this last 22 months with this lawsuit with the New York Attorney General's office, a lot of the stuff that we can't see, like commercial paper, fiduciary deposits, and all these other things, were probably given to them. If you look at this article, it talks about how Tether had to give up like hundreds of millions of documents. I forgot where I read that. It was like an insane amount of documents provided to get them to settle. So basically every single dot or T or skeleton was probably given to them. So this makes me a bit less worried, I should say, about some of these concerns. Now, I'm not going to say that all of it is gone, right? But I'm figuring New York Attorney General's office, New York in general, they aren't idiots. They're the harshest when it comes to crypto regulations, which is why a lot of exchanges don't operate in New York. It took Gemini forever to get their license, a bit license in New York. Same thing with Coinbase. But you still have Binance.us that's not open to New York. And several others are not open to New York for the same reason, right? Because they're not idiots. They're very strict. They're the strictest state anywhere. So, I think a lot of people are ignoring this. I think this is not something we should take lightly. You can't just assume that they've gone through 2 years of investigation and that somehow all this was overlooked. I don't think they're idiots. I think all of this was looked already. Okay. And finally, I want to make this point. This last point is this. Let's just say Tether does go belly up. The entire thing goes belly up. What is the overall market cap of Tether right now? It's 62 billion. That's a lot. It's sitting at number 3. That's a lot. But on the grand scheme of things, 62 billion out of 1.6 trillion is still a small amount. Now, I know you could argue that the 1.6 trillion could include a lot of derivatives and stuff like that, right? Multipliers of things, not actual cash, right? It's hard to say. It's hard to say, but we do know that the overall market cap is 1.6 trillion. So if you take 60 billion out of 1.6 trillion, that is still a small amount. That's about 5%, right? That's a 5%. Less than 5%. It's actually more like 4% or 3%. So even if you just took out Tether, you just removed it across the board, overall, I think it still makes a small percentage of the overall market cap. There will probably be, if, just hypothetically speaking, if somehow there's a big deal, Tether goes bankrupt, Bitfinex goes bankrupt, and all goes bankrupt, I will not doubt that the market will be affected. The market will take that as a really serious thing, and we will probably see some major reds. But the market will recover because overall, I think it's still a small part of the overall money that is in crypto today. Now, Tether going belly up in 2017 versus 2021, I think there's a big difference. Had it gone up in 2017, I think there would be mass destruction. Today, with this amount of money that's in the projects right now, I don't think it's nearly as destructive as before. So just want to address that too. So in the end, right, do I trust Tether completely? No. Do I think there's a big worry right around the corner, right around the horizon, and is, as bad as Bloomberg or even Kevin makes out to be? No, I don't think so. I do think that there is some worry there, but not as destructive or not as big as what these guys are saying. So just want to address that as well. Yeah, that's pretty much all I want to say. So I want to address JPMorgan and Tether and talk about Dogecoin, and that's pretty much it. All right, guys, let's do some Q&A. Oh, man, I said a lot there. I said a lot. Oh, another thing I didn't mention, I just realized I have this up. Another thing I didn't mention is this concern about not having 100% cash, right? I did look at this. I don't know if you guys are aware, but banks, they do something called fractional reserve banking, which means that the Federal Reserve does not require banks to hold cash or all the cash that they're supposed to have. So in essence, it's just as dangerous, but you could argue that, the Federal Reserve and FDIC will insure it. But, if you look at this, the biggest banks out there, the ones that have more than 124 million assets, only have a requirement to keep 10% in cash, which is why if you went to the bank and you're like, hey, I want to take out, a large amount of cash, normally they give you an eye and say, no, you can't. We don't have that much cash on hand. Because they're only required as a bank to have 10%. And guess what happens to the 90%? They invest it or loan it out, right? So they provide mortgage loans, and they provided some really toxic ones before, but they also do loans and other kind of things, and they invest in the money markets and invest in equities, and there's a lot of stuff that they do too. So just so you know, our banking system also operates exactly the same way. Not to say that makes it any better, but still, that's how banks also work in terms of fractional reserve requirements or fractional banking. So yeah, you could argue that the banks could all collapse pretty soon too. All right, that's pretty much it. Overall, guys, ignore the FUD. There's gonna be a lot of it. There's a lot more of it every day, so ignore it. We will get past this. I'm not going full Kwame Brown. I have been keeping up. It is quite funny. All right. Burgermeister says, I bought 1 ETH. Okay, hope the fudge doesn't kick me in a few days. Don't worry about it. Even if it goes down, it's okay. It's going to come back up. You never know. You just never know, right? Matthew... George is a man, ignore the FUD, buy and hold. I had a lot of practice. Did you see that AMP is the first carbon neutral payment network in crypto? They also announced partnership with Silicon and RS, just flagging it. I don't know if that's true. As much as I like AMP, if they claim that, I don't know if that's true. All proof of stake, payments or projects or blockchains can be seen as carbon neutral because it doesn't take a lot of energy to power it. So I don't know if AMP could really claim that they're the first, but they're using proof of stake. That's fine. But you know what? Yeah, I'm glad to see them. Grow, but I don't know if that's a true statement. But anyways, what do you think about Ren? I know that they're moving to Polygon, and they create synthetic tokens of multiple things, like you could have a synthetic Bitcoin for DeFi purposes and stuff like that, right? So I think they're okay. The market for it is pretty crowded, though. Would you rather buy Link right now or ADA? Who do you think will perform better in this cycle? Oof, that's tough. I would go with Cardano at this point. I made this point many times before. Cardano doesn't even have smart contracts or DeFi, and they're already this strong. So imagine when they do, they could be blowing up. That lead between Ethereum and Cardano could shrink very, very fast. Very, very fast. But it's a tight race. Cardano and Binance Chain, they're still neck and neck right now. Governor DAO, I have no idea. Yeah, I'm not gonna look at this. Too early, too small. Block sounds familiar. Which one is it? Block Money or Block? Or Block Cloud? I don't know which one you're referring to. Probably Block Money? They're both way too small. Yeah, I don't know. All right, I have no idea what that is. Patrick, thank you for being Yoda of crypto and keeping it real. Take a peek at Mural. I did look at that before. Mural is like a way, it's like paint, but somehow you could create an NFT from it. It was very hyped up before. Very hyped up. The problem with Mural is, all right, let's do this. All right, let's get out of here. Well, they're on Polygon. So, like you could draw whatever you want, okay? Like, if you're not like, well, the thing is, it's like, if you're not like a celebrity, who's gonna buy this? The reason why people buy NFTs is because it's almost like an emotional thing. You buy it because someone created it, someone that you really love or something, or it's worth money. That's why you're buying it. Like a Mural is just like random people like creating stuff. I don't know how valuable those are, so. Michael, you should just sell it. It's probably a mistake. Sell it right away. Do you think it's a good idea to stake ETH 2.0? Well, if you use like something like Anchor, you could stake and then you could also get like a liquid version of your ETH back that you could do something with. I mean, right now, if you're staking ETH into the Beacon chain, you're really supporting the network. It's really like you're making the ETH deflationary because you're staking it and you can't take it out. And also you're really just powering the network. So it really depends on if you really care, or you're trying to make money. If you're trying to make money, maybe not so much. But if you're trying to, if you're just go hold it anyways and you want to see ETH do better, then yeah, go ahead and stake it. Stake it. What else? Dylan asks, what's your advice for someone to get in? The best advice I give you is be patient. Be very patient. Too many people come into the game because they hear about Dogecoin pumping like today or whatever, right? They don't really care about the fundamentals. They don't really care about any of the projects. They just want to make quick buck. And that's usually how you get wrecked because you go all in on something that you don't quite understand. And we have a downturn. Then you go down 30, 40, 50, 60, 70%. And then you're like thinking, F this and I'm out, right? So be patient. Pick up the good projects. Pick up ones that definitely has potential, has real world implications or usage. And then, invest in the projects that you believe in, right? So really, that's what you want to look at. TJ, you pass a project, you tour it too small. Isn't that when we want to get in? No, because they are basically too small. And you know what? Those tend to pump and dump, and many fail. In that case, you're pretty much just buying a lottery ticket, right? I don't believe in that. I want to see projects that actually can get, some network effect, get some traction, get some followers, people that will stand with the project and they're investing because they believe in it, not because it's a micro cap that could pump up 1,000x. And when I see projects like that, that's what it makes me feel like. People are just trying to get into a 1,000x project. Especially when you ask me publicly, because more so or not, people just want me to look at something and say it's good or recommend it, and then it shoots up. That's another reason why. Who will finish first, ADA or ETH? Oh, I don't know. I don't know the timeline for either, like when they're supposed to be done. I'm just assuming that they're going to be done in 2022. I don't think either one is going to be fully complete in 2021, so I don't know. That's a hard question. IOTA, I know they're still trying to upgrade, still trying to get rid of the coordinator node, so I want to see if that happens. That coordinator node has been a thorn in their ledger for a very long time, and I still have not seen that being removed, so I'd like to see that happen. They reached out to me recently, trying to get some kind of interview or something going with them, and also I want to get them to be at the Vegas conference and actually speak. So hopefully we're going to make that happen. Orion just partnered with Amazon to sell NFTs. Is this a big deal? Yeah, of course it's a big deal. But I find that hard to believe that Amazon partnered with them. But I do like Origin Protocol. They're in the NFT market space, but are you sure they partnered with Amazon? I don't know about that. Or if they did, they would be like up 100%. Or they didn't partner up with them. So you could probably just run a node on AWS. Right? What is this NFT that you're saying? This one? Let's see. Origin partner with Amazon now on NFTs and continues to push a boundary of what is possible. Learn more. I think this is fake, man. I think they're just running it on AWS. How to create and sell non-fungible tokens. How to mint it. Yeah. This is not Amazon jumping in to create NFTs. This is just Origin utilizing AWS. So that's very, very different. Thoughts on Elrond? Quite honestly, I don't know what's been happening with Elrond. So they've been they were really hot. They just got cold, and I don't know what happened. I really don't know. They lost a ton of traction. I'm just curious. Let's go to their Twitter. What else? Pluto's is on Elrond. Last week, you have DeFi insurance for dApps, a sports platform. I mean, it seems like altcoin buzz, mentioned them. I don't know. They seem like they're doing pretty good. There's a lot of projects that's onboarding. But yeah, here's another one. I mean, they seem to be doing pretty good, but just not a whole lot of movement right now. But I do think they're one of the promising chains, fast chains, EVM compatible. So I think they could do well. Pay, again, too small. Favorite altcoin on Coinbase US? I don't use Coinbase, so I can't tell you what's my favorite because I don't know all the coins on there. So I'll just go with Bitcoin. What else is there? I'm missing a lot of super chats here. All right, last few questions. I sold all my ADA at 225. Now I want it back in. What is a good price? Is the current price too high? No, I can't. You're asking a trick question. You're asking someone, is this too high? Meaning that you think it's going to go down, and no one really knows if it's going down or not, right? Obviously, you could buy back cheaper now. You should be grateful that you could do so and get more Cardano. Stop trying to time bottom. I think we're going to go see some serious fireworks in July. I'm going to try to buy as much down here as possible. Well, you may be right about that. You may be right. One of three things going to happen, right? Bitcoin is going to just stay stagnant for a while, for a few months until the end of the year or later into the year, right? Or you go see some explosiveness, like you said. I think the downside is more limited than the upside right now, despite the fact that JPMorgan says, no one's buying. I don't believe that at all. Funny person asked, buy stocks or crypto or both. What do you think is the best for return on money? I got to say, it has to be crypto. Crypto's returns is way, way, way more than stocks. But if you have a significant amount in stocks already, why not both, right? Why not diversify? So, yeah. Stellar holding at 44 cents. Stellar has been doing better recently. I think there's more enthusiasm around DeFi that's coming, so that's definitely helping them. I'm not paying attention, Julian, about AMC. I just think that AMC GME people should come into crypto. The mission for crypto is a lot bigger, not a lot more encompassing. the mission is more important. Rather than wreck some hedge funds, you wreck the entire, or you upset the entire financial system. That's what crypto is going to do. What do you think about ETC? This morning I covered it's one of the most volume on Twitter for some reason. A lot of people like a UTC. I guess it could do well because of that. I still don't know what their future plans are. Views on Biden's 40% capital gains tax. You know, it's just everyone should just move to Puerto Rico, I guess. I don't know. I don't think it's going to be true, but there's talks about if he gets it implemented, he wants to retroactively go back to April. So it's not even when it gets implemented. It's going to be retroactively moved back to when he proposed it or something like that. It's a little wild. It's a little wild. All right, last few questions. I have 100 Litecoin. Should I hold for loss? Should I hold or sell for loss? Nah, I don't think you should sell for loss. You might as well just hold it at this point. It'll probably come back. VPN for my phone, is this a must? You could. I mean, why not, right? If you really want to hide your transactions, why not? Just like your computer. All right, guys, that is pretty much it. Overall, you know, Bitcoin is still hovering, coming back up a little bit, but we're still stuck around that 36, 37 range, right? But I do think the downside is more limited than the upside. I think the upside is infinite at this point, right? But of course, we still have a lot of FUD. JPMorgan causing a lot of FUD. I don't buy it at all, right? Don't fall for that. Now, Tether stablecoin FUD, that has been around since 2017, 18, 19, 20, 21, right? But hopefully, you know what? I've kind of dispelled some of that fears, right? Maybe not completely, but dispelled a lot of it. And I do think the new Attorney General's office really does it for me, at least, in terms of all the things that we don't know. I'm pretty sure they do know, and maybe they will shed some light, and maybe some of this will come to light in the future. So, all right, that's it, guys. So ignore the FUD, stay the course, and buy the dips. So I'll see you guys tomorrow, 11:30 a.m. Central Standard Time. All right, have a good one, guys.